All right. It is much later than I usually do my podcast, but it's just been such a crazy week that I wasn't able to get into to do the podcast until today. But I do have what I think is going to be kind of an exciting topic, and it is really I try to make these conversations as current as possible. It's why I don't batch content. It's why I don't, even though I'm on vacation sometimes. I'm not on vacation now. I'm back in my office, as you can see, but I I enjoy creating content and sharing kind of what is actually going on, what I'm seeing, and this week in particular, the reason I'm so behind, if you will, is I've just been having several meetings with a new project that we just closed on. I'll share more about that as we get into it, but it's in Fernie. It's a great location. It's a great site, and we're already probably about 60% pre-leased. And the other conversations have been on new projects that we're looking at right now. We have another one under contract, and then with prospective coaching clients that are looking to work with me, and specifically looking to either raise money, get into their first commercial or their next commercial property. And what I found interesting in my conversations today were a couple of things. First was this concept of easy is hard and hard is easy. And I want to give credit to where I heard it, and so it's a book by MJ DeMarco. And I'll see if I can find the title. It's The Great Rat Race Escape. I think it's a fabulous book. It's really more centered around entrepreneurship, but I think a lot of the principles apply very well to how I invest in commercial real estate. And this idea, this principle of easy is hard, hard is easy, I think I'll explain what it is and why I feel there are some people that when they get into commercial real estate, there's a little bit of a disconnect. And that disconnect is if you've invested in residential real estate, I don't want to say it's easy because I don't think anything where you can make, 5, 6, even 7 figures is easy. But in residential real estate, it's fairly straightforward in terms of finding properties, going on the MLS, having residential brokers send you deals, going out touring and looking at properties. But when you get into commercial real estate, the world is very different. And when I had conversations today specifically, and even yesterday with a few individuals, what I found was they were looking for like a guarantee or certainty that they could find a property in a very short amount of time, most of them. And I never want to mislead anybody and say, you know what? Yeah, I can guarantee that you're going to find a property. Look, I can find a property. It doesn't mean it's going to be a good property. And so sorry, my dog is barking because there's some kids bugging him outside. I think he wants to get outside and play. Hopefully you can't hear it on my mic, but and it's distracting, but hopefully I can stay on topic here. The idea of actually embracing the fact that it's difficult to find a commercial property is actually a good thing. And I'll tell you why I think it's a good thing. Because the value of finding a commercial property is so high. When you look at what a commercial broker gets paid, like when I was selling a lot of commercial real estate, it would be not uncommon to earn 75, 100, 200, even $250,000 to find a great commercial property for a buyer. Compare that to residential real estate, and unless you're doing like, 7, 8, 9-figure properties, you're probably not going to earn that much. But once again, much harder to sell luxury real estate than it is to sell, a cookie cutter bungalow, right? And so there's this principle that it's almost like the 80-20 or 95-5 principle. The harder something is, generally speaking, the more you're going to earn. To become a doctor, it takes 9, 10, 12 years if you're going to be a specialist. Much harder, higher threshold, higher barriers, if you will, to be able to get into that position. But once you're there, I don't want to say it's easy because it's not easy, but you're able to generate revenue at a very predictable rate. Same as commercial real estate. When I find these properties, it might take 6 months, 12 months to find a deal. Sometimes much faster. Sometimes like right now, things are coming at me very quick. But it ebbs and flows. So I don't want to pretend that it's always this easy. That it's just not the case. But it so happens that right now we're in a very good kind of position, and a lot of opportunities and deal flow are coming, and so we're taking full advantage of it. But if you're new, that's probably not realistic. But as soon as you get your first deal, the first deal is always the hardest. Once you get that first deal, now you're a player. You're known in the market for someone that can actually close on a deal. You're going to start to see more and more opportunities. So I think if I could just, it's more of like a belief or a mindset, if you will, of looking at it saying, okay, the fact that this is going to be difficult is actually a good thing. Because what it does is it also weeds out about 95% of people that think that commercial real estate is something they want to pursue. And it's not right or wrong, right? There's things that I have looked at doing and then realized, for example, running a marathon, right? The barriers to running a marathon and completing it are much higher than they are to run a 10K. And so you're going to have less people that have done a marathon than have done a 5K or 10K. And no different than, say, training for an Ironman, right? Much more difficult to get to that elite level than it is to do, a sprint. And so I'll give you a couple of suggestions, if you will, and you'll be able to even see inside the world of commercial real estate why not all commercial real estate is the same. Back in 2008, when I was looking at multifamily properties, this is going back into the US, there weren't very many investors that felt comfortable to pull the trigger on an apartment building. And so we were one of the few buyers at that time that were prepared to really look at multifamily seriously. Now, fast forward, as soon as the US market started to improve, kind of 2010, 2011, there was a lot more competition. It became even more difficult, and it was just more challenging, if you will, to find assets that made sense. Look at today. On my coaching call with my clients, one individual in particular is going into Dallas and Phoenix to look at multifamily, and there is so much competition because the barriers to entry for being a syndicator for multifamily properties have went from here way down to here. And so now you've got an imbalance of supply and demand. You've got 120 people, 117, I think, that were bidding on the last deal he looked at, and it went well over $1 million over list price. So if you're looking at multifamily, now you've got to do something to separate yourself in order to find those deals. And so what I shared with, I'll just call him John, what I shared with John was, how can you find deals direct? How can you do something that no one else is doing? Look, it's very easy to wait for a broker to send you a deal. It's actually not very easy to pick up the phone and cold call an owner of an apartment building, and not just call one, but call 50 or 100. That would separate you. Now, what I'm doing, which is different because I have a different business model, and doesn't mean that my business model is the one to follow, because every market, every individual is going to have different risk parameters, how much time you have, how much capital, how much experience you have. But for me right now, I'm looking at things saying, okay, where do I have expertise that I can apply to the market where there is less competition and high barriers to entry? Development, industrial, retail, much higher barriers of entry. I mean, to give you an example, I literally just looked at one of the leases for our new retail property. This thing was probably 70 pages long. When you compare that to a typical residential lease, it's 5 pages. So it took me the better part of an hour to go through this thing. And that's like the third time I've had to go through it. And this will probably get negotiated for the next 30 days, right? Hard, right? Barriers to entry, much higher. And this isn't, we've got multiple tenants, if you will. So I don't say that to frighten or scare. Some people will hear it and say, you know what, that's just not for me. That's fine. Better to know that now than to get into it and realize, you know what, this isn't an asset class, or this isn't something that I really want to get into. Or maybe you find someone that's doing it and you can leverage your strengths that you have to be able to piggyback off them, right? Maybe you have money, someone else has the deal, and you're able to come together into some sort of a partnership or an arrangement. So I think that that's really what I wanted to focus on. I would say that this concept of easy is hard and hard is easy, I think, is something I'm going to start to talk a little bit more about. I know it's not maybe as interesting as doing a deep dive on a deal. I'm happy to do that. And if you don't have a copy of my book, I don't talk about this principle outright, but I think if you start to read between the lines, you're going to see this theme. It's embedded in a lot of the content that I create. So if you don't have it, I'll put a link below. Otherwise, I think you can just go to, because I just put up a new page where you can actually get a few extra trainings, theclubsyndicate.com. So that's the club, all one word, and syndicate, syndicate.com. If you go there, you can get a copy of the book. And for a little while, I'm going to test something. And I've already had one individual say he was very appreciative that I am sharing some of this information. So that's it. Have a great day. It's a little bit late. My kids are waiting for me to go play outside, and I definitely know my dog needs a walk. So that's it. Have a great night. Talk to you next week.